Hello everybody, welcome back to the channel. If you are new to this, do consider hitting the subscribe button because I'm almost hitting 150 subs in another 4 subscribers. And yeah, of course I'm trying to hit 1,000, but I think I'm a long way from 1,000. Uh, this month was pretty much as good as the last month. So my target has been 2% of capital. Around 50k was my target. So you can say 1.5, 1.4%. And I've been consistently hitting it for 2 months now. So May had four weeks and I made 2.46. So which is slightly better than 50k. And then June was exactly 50 every week. You can say on average I was exactly 50 every week. Average is 60, but yeah. So this has been my performance for June month, and the only thing that I've been using is calendar spreads. I haven't used any other spread. You can say, to be exact, double diagonal calendar spreads, and I'll kind of discuss on how the spread is made. So, if you go to Sensible Strategy Builder or any strategy builder, you can pick strikes to sell. Let's say you sold 15 to 100 and you sold here 16 to 100, and what you get is what's called a strangle. So what's the problem with the strangle? The Greek called Vega is negative for strangles. Let's say you do 10 lots, because I'm assuming nobody's gonna start selling options till they have like a 10 lakh capital. So you can see Vega is minus 1244. What this basically means is that if there is sudden increase in VIX, and most of our fear is when market falls, it falls really fast. So that's normally when VIX goes up. And when that happens, one side will start increasing faster than the decay on the other hand. So it will not be matching. Usually in a non-increasing VIX environment, this will always try to match each other out with because of the delta move. And if you have like many days in a spread, then there will be some theta decay also. So you always stay kind of positive, if not negative, when you make a strangle like this. But if VIX goes up, because I mean, those who have read about Greeks know that Vega is what, um, let's say, with every point increase in VIX, you will lose this much rupees per percentage increase in VIX. That's what it means. So if Vega is negative, then if VIX increases, you lose money. If it is positive, if VIX increases, you don't necessarily gain money, but it doesn't give you a large loss. Okay. On the other hand, if you have a Vega positive strategy and VIX goes down, then your profit will decrease. Basically, this green curve starts dropping. So how do you keep your Vega positive? So if you see, if you sell anything, your Vega is always negative. So naturally you need to buy something to keep the Vega positive. And I like to do that by selling a mix of monthly expiry plus the next week expiry. So, and this is basically a lot of trial and error. You can check it in back testing or something like that, which is better for you and which works better for you. Right, I like to keep my Vega positive, but at the same time, I want to keep this curve close to 2% to 2.5%. That's what I like. So I try to hedge with monthly expiry and sometimes with next week expiry. It really depends on how much this green curve is showing. I like to keep it at 2%. If it is already exactly at 2%, then I am fine. But if I'm not able to keep the Vega positive and I still need to add more hedge, then I would sometimes go to the next week because the decay in that won't be too much. It's kind of complicated, but basically what I do is just go by something around 90 to 100 rupees. So here I would probably hedge with something like 14,800, 10 lots, and here also I would like to do the same. Here it's kind of expensive, so I'll buy 9 lots. And this I want to double it. Basically, I want to sell double as much. Right? Yeah, now 17k is what's showing up. And Vega is positive. So this is a good spread because the margin needed is funds needed is 14.9 and you are getting 17, which is about 1% plus at expiry. Let's see, 1.4%. Yeah, 1.4% is kind of like a sweet spot. If you want to get more, you can obviously go closer and then sell. But yeah, it really depends on you. So this is what you want to do if there is a sideways market. And what I do when I have a directional view is I usually just have one of the legs. So I will have either a put calendar which is heavily selling like 30 lots or something, and my hedge will be lesser, or I will sell 30 and I'll kind of do like a same expiry just to get the advantage of margin. I would buy something of like 5 rupees or something, which is like really cheap but gives me advantage in selling more. So I would say I will buy something like this 20 lots, and then now it's only 12, so I can sell some more of so if I have a directional view, I want to take more risk, so I will sell something of 30 rupees also, 10 maybe. Yeah, and now you can see that if even if it goes up by 3%, I will still make close to uh, yeah. So I do something like this when I have a directional view on the market, and same thing for shorting also. This is if it's going up, then I would do something like this, heavy selling only puts. And on the other hand, I would, if I'm going to go short, then I do something like selling a lot of calls. And then yeah, so these are the three things I do. And then once I am convinced that it has reached its maximum potential, then I will maybe think of selling some opposite options also. Like let's say I'm selling only puts for a few days, then I once I realize that yeah, the up move is kind of exhausted for this expiry, then I would sell some calls also, and vice versa. If I'm selling only calls and I feel like the market has kind of bottomed out, then I would sell some puts also to maximize my profits. And if you see how the month was, I did pretty much all this month, both sideways, bullish, bearish, everything. I will take it one by one and I will just remove this icon here. So June month I was bullish ever since this these two candles, and I was expecting the market to shoot up, but it kind of went sideways. And this week, the first week, I realized that I don't need to keep too much of bullish view. I can keep somewhat sideways because it's kind of exhausted, and that did work out. And once that expiry was over, I again tried to go bullish, basically on this day, and it did not work. Instead, it just fell a lot. It gapped up and stuff, but and I tried to sell more put and on the side, and it gapped up, and I was thinking, okay, fine, yeah, it's kindly, broken out of this 3-day range, but then it collapsed. And then these 2 days I was pretty much fine. And I think around this day only I started the trade, and till here it was having some gains. And this day it gapped down and then it went up. So this also was good. And this was a really, really good sign because it filled the gap, etc. And wherever it broke out, it has come back there. So I was kind of positive on this, and I went for a bull issue, but on the other hand, it collapsed. So this is when I completely removed. When I realized that this is really a bearish setup because you have a really good bullish candle, but there is no follow through. Instead, there's gap down and even further move on the downside. So I realized that this is pretty much really, really bearish, and it can come till maybe here. So I went completely short on this day. Only short. I removed all the puts and started selling heavily on the upside. And next day there was a huge gap down. And this was the second trade. And that trade gave me around 30 to 40,000, something like that. And then I pretty much traded sideways for a while. And I think I missed this day. And someday I got to capture the upside move. I think it was on this day. And I got COVID around this period only. Somewhere around here, I got COVID, and I was pretty much trading sideways, bullish sometimes. And now I am again kind of more bullish for the next week, coming week, and I can show you my positions that I'm holding. So this is kind of inaccurate because I did close some legs. So I booked so far 87,000 and there's 53,000 loss in the remaining spread. But that is because of this call hedges expand. I mean, they were losing money, and my call on the upside had decayed from 26 to 5 rupees. And then I sold the 16,200 for 13, and on Friday it was kind of bullish, so it expanded till 21. And so I ended up booking all the puts and climbing the puts up. So you can see this is the actual curve, and right now it's at 33,000. Tomorrow, even if there is like a 1% gap up, let's say Monday 9:30, this is an approximate, it's not exactly correct. Even if there is 1% gap, it should be fine. I shouldn't be affected by it a lot. And I will close my spread on Monday itself because it kind of says that it's going to peak out tomorrow itself, and I'm okay with booking 50,000 or 60,000, maybe 60. I'll get 60, and depending on how bullish the market is or bearish, I will close it. If tomorrow is like really, really, really bullish, then most likely I will close it at whatever it is showing because it is pretty difficult to manage because next stop is definitely 16,189, the gap area, and around these EMAs or this EMA, anywhere it can climb till any point, and I'm not sure where it will stop. It can even stop at 16,200, and I'm selling exactly 16,200, so it's a very big gamble. I would rather close anything that I have on this day itself. I'm pretty sure I won't be in loss even if it climbs 2%. I'll be able to book out at something. I will just let it go, and being the first expiry of the new quarter, and historically this quarter has not been that great, so I want to completely go risk off and close everything and go for the next trade. I was expecting this bullishness to come day before, but it did not happen, and this day when it gapped down, seeing 16,400 losing so much points and my puts expanding, I was kind of tempted to move down. And towards the end only this huge move happened. It did not happen till a long period of time. The last 2 hours only this huge move happened here, and all we started seeing it going down further after reaching day highs. So I thought, okay, now if I don't sell 16,200, it'll be too late, and it'll be like some less than 10 rupees, and there's no point really selling that, and I'll have to sell 16,100 at some 10-15 rupees, and that's kind of risky because in that case I won't be safe enough if by chance Monday is like really bullish. And that's why I ended up selling 16,400 at around 1 o'clock, 1:30, and then it starts reversing for some reason, and that's what led to the sudden increase in 16,200. But let's see what happens tomorrow. I hope this video was kind of informational. Do consider following me on Instagram and front page. The link is in the description, and don't forget to subscribe to the channel. I'll update my next PNL at the end of July. Bye bye.